Okay, students, let's start the session. Here, if you look at this question kit, this question kit covers entire syllabus area, assurance engagement, rules and regulation, ethics and acceptance, controls, corporate governance, like that. The entire syllabus is covered, but how this tute or question kit is differ from paper revision is different. Revision paper is full of theory question, but here chapter wise, all type of question. To take your final exam, section A is MCQ, section B, case study and theory questions. So all three types of question, theory question, case study question, plus MCQ question, everything covered in this question kit. Everything covered in this question kit. Now, let's move to question number 1, 5-element assurance elements we know, right? That include three-party relationship, subject matter, suitable criteria, sufficient and appropriate evidence, right? So appropriate subject matter. So all these things comes under question number 1. Now let's do question number 2. Let's do question number 2. See here, they gave a case study and they asked identify and explain level of assurance provided by external audit over review engagement. So the level of assurance provided by external audit and other review engagement. Okay, I'll give 2 minutes. Type the answer. Don't need to read that case study. Right. So how external audit level of assurance? How review engagement level of assurance? Quickly type your answers. Then we can discuss. Quickly type your answer. Then we can discuss. Do it. Quickly do it. So in this case, students, this week TRG and next week TRG, I'm going to discuss this paper only. So try to write your answers. Try to write your answers, right? Because already we covered all the aspects. In the TRG, I didn't cover substantive procedures and controls. Reason, those 2 areas I covered in the class. Okay. So directly let's move to the questions. So this week also, Thursday 22nd TRG, 29th also we have another TRG, right? So let's discuss and finish it off this paper. So quickly type your answers. I'll give 2 minutes. Then I'll discuss. So for this, you can keep an exercise book or write whatever a Word document in your laptop. Type your answers quickly and compare your answers with my answers, right? I'm not going to share answer scheme for this paper, right? So you can update your answers while I'm dictating or while I'm typing. Okay, quickly do this question. Right. Identify and explain. See the verbs. Identify and explain the level of assurance provided. The level of assurance provided by an external audit over other review engagements. So let's do this question. The answer: external audit provide reasonable assurance, which gives high level of confidence to shareholders. But if you look at review engagements, are providing lower level assurance. Lower level assurance. Lower level assurance in the form of negative opinion. In the form of negative opinion. See, if you look at review engagement, we are giving negative form of opinion. So negative form of opinion means simply a lower level confidence. But when you are looking at external audit, which provide a reasonable assurance, reason a high level confidence to shareholders because positive worded opinion, right? But external audit provide positive worded opinion. Positive worded opinion. See here, under external audit, auditor provide more detailed procedures such as test of control and substantive procedures to provide high level of assurance, but not absolute. On the other hand, under review engagement, limited procedures are performed by reviewer. Here we are not using the word auditor, reviewer. To provide low level of assurance. Low level of assurance. So 3 marks, I covered 3 points here. Right? So basically, you need to cover these points in your answer. Copy the answer. Okay, now students, let's move to the next question. Question number 3, explain the status of ISA. Explain the status of ISA. You all might studied what is ISA, International Standards on Auditing. So, International Standard on Auditing, that is simply we call ISA, is developed by International Audit and Assurance Standard Board, which comes under International Federation of Accountants, IFS. Auditor should comply with ISA when they are conducting external audit. Auditor should comply with ISA when they are conducting external audit. It explains auditor's responsibility over external audit. And also, if you look at this ISA, if any national difference arise between ISA and local standard, always auditor need to comply with local standard. Auditor need to comply with what standard? Local standard. So this is the summary of ISA. This is a summary of ISA. Copy this. Copy this. Right. Now let's move to question number 4. Already we discussed, right? It's very simple question. The rights, excluding those resignation and removal, which means like while you are working as an auditor, what sort of rights you have, right? And also question number 5, identify and explain 5 fundamental principles, ACCA Code of Ethics: integrity, objectivity, professional competence and due care, confidentiality, professional behavior. Okay. Okay. That is the answer for that. Question number 6, important. See here, question number 6. They ask us to identify 5 ethical threats, not ethical issues, ethical threat. And they ask us to suggest safeguard. They ask us to suggest safeguard. So one side ethical threat, the other side safeguard. Okay, I'll give 5 minutes. I'll give 5 minutes. Please read this story and find out ethical threats. Please read this story and find out ethical threats. Do it quickly. Then we can discuss. Find out 5 ethical threats from the story. Then I'll explain. See here, you are the audit supervisor of Carving and Company and planning the audit of H company. It's a listed entity. So you should understand, yes, it's a listed company. Listed and unlisted is very much important because the safeguards are differ based on the status of listed or not. The company manufactures computer components and forecast profit before tax is 33.6 million. Total assets 73.9.3 million. Each company distributes its products through wholesalers as well as via its own website. The website is upgraded during the year. That's fine. So this is audit risk related case. So the last paragraph, I think, related to this. The finance director keen to announce the company financial results to stock exchange earlier than last year. And in order to facilitate this, he asked facilitate this, what he did was he asked to complete the audit very soon. So he asked to complete the audit very soon. So when we are trying to complete the audit very soon, what is the ethical issue? What is the ethical issue? Intimidation threat. So how many of you all mark this as intimidation threat? So there is an intimidation threat here. There is an intimidation threat here. Because when there is a time pressure, students, the threat to objectivity is their intimidation. So it's like an actual pressure. It's like an actual pressure come from finance director to complete this particular audit within a short period of time. So what is the safeguard here? Actually, the engagement partner should discuss this timing with the client in advance. And you should understand the client, and if it is there is a time constraint, ISA 330 standard allowed us to start interim audit. ISA 330 allowed us to start what? Interim audit. So if that is the case, we can start interim audit. You got my point? So that is the safeguard. So you can't convince yourself, right, at the last moment. So finance director is asking results soon. So let's reduce our scope. You should not do that. You should not do that. So that is the safeguard. H company's finance director informed that the audit engagement partner, that one of company's non-executive director has just resigned, and he inquired if the partners of Carving and Company can help H in recruiting a new non-executive director. Especially, he has requested the engagement quality control reviewer. Okay, see here, if you look at this problem, if you recruit a non-executive director, that will create a self-interest threat. Reason, what is self-interest threat? Financial and non-financial interest, right? See here, if auditor is involved in the selection of non-executive director, these non-executive directors are going to take positions at board level. Corporate governance, you might study different boards, committees. Audit committee, nomination committee, remuneration committee. So, if you are recruiting a non-executive director who are going to be the members of the board, have key role over overseeing audit. For example, let's say you are recruiting someone as non-executive director. He become a chairman at audit committee. He become a chairperson at audit committee. So he going to monitor you. He going to oversee you. In that case, there is a self-interest threat. There are non-financial benefits. There are a lot of benefits that you can get from that audit team, audit committee. Because audit committee's independence or objectivity is get affected, get impaired. So what is the safeguard? Simply, the firm not undertake management responsibility. Firm can suggest people. Firm can suggest people, qualified candidates, but who should recruit? Who should take the management decisions? All those decisions should be taken by management. It should not transfer to auditor. If auditor is in the process of filtering, if the auditor is in the process of selecting candidates, the threat is very significant. The threat is very much significant. So that will create what threat? Self-interest threat. That is create self-interest threat. Is that clear? Is that clear? Understood? So here non-executive directors going to take the supervisory role. Non-executive directors are going to take the supervisory role. Is my explanation understood? Yes or no? Now let's move to the third one. Specifically, he has requested engagement quality control reviewer. We studied what is engagement quality control review. So engagement quality control review or hot review, a person in the audit firm, maybe a partner, who not involved in that particular audit, need to review the engagement partner's work. Need to review engagement partner's work. That is we call quality control review. But here, the quality control reviewer until last year audit engagement partner. So normally when we remove an engagement partner, the period is listed company, the maximum period is 7 years. After 7 years, we need to rotate the partner. So what happened here is 7-year engagement partner worked. After 7 years, we appoint this person as quality control review. We appoint this person as quality control reviewer. So in that case, it is creating significant familiarity threat. So that person still have some impact over the audit. That person still have impact over the audit. So he is not in a position to apply professional skepticism and professional judgment. So the safeguard is, simply the person who worked as an engagement partner for the period of 7 years, not allowed to take the role of engagement quality control review. Not allowed to take the role of engagement quality control review. That is not permitted. That is not permitted. Is that clear, students? Is that clear? Familiarity threat. Understood? Is that clear? Familiarity threat. Now let's continue. Carving and Company also provide taxation service in the form of tax return preparation along with tax planning. Here, most of the students might have some doubts, but try to understand here. Tax return service is not prohibited. Tax return service is not prohibited. Right. So you can do tax return service. That is not a problem. Tax return service is not prohibited. But which one is prohibited? Tax planning and tax work. Advice. So here see, Carving and Company is providing taxation service. So there is a potential self-interest threat. When we provide tax service, potential self-interest rate. Why? Because tax service is a recurring service. There is a fee dependency threat also. Right? So that is one threat. So if it is a fee dependency self-interest, communicate to charge with governance, perform engagement quality control review, safeguard. Sometimes taxation service will create self-review threat also. Taxation service will create what? Self-review also. You got my point. So self-review means, again, tax is a part of financial statement. So that create what? Self-review threat. But tax safeguard, tax planning and advice is prohibited for listed companies. Third argument, due to fee dependency, there is an intimidation threat also possible. So when there is a fee dependency, there is a possibility of what? Intimidation threat also, because fee dependency means we are relying on client. Client can able to influence us. So that is, I can say, intimidation threat. So three aspects you can argue here. Next one, the finance director has recommended to the audit committee of H this year audit fee should be based on company's profit before tax. See here. So audit fee is based on what? Company's profit before tax. This is what we call contingency fee arrangement. Contingency fee arrangement. So contingency fee arrangement will create self-interest threat, but safeguard is international ethical standard will clearly said fee dependency will create self-interest, which is prohibited. Which is prohibited. So fee dependency threat is prohibited. You can't charge audit fee in that basis. You can't charge audit fee in that basis. Next one. Today's date, 20% of last year's audit fee is still outstanding and was due for payment 3 months ago. So this will create again self-interest threat because outstanding fee. Outstanding fee can be perceived as loan to client, right? Which is strictly prohibited. So you should not keep any outstanding fee. What is a safeguard? If the outstanding fee is not cleared by management or client, should not commence detailed work of the audit. Should not commence detailed work of the audit. Hope you understood. Is that clear, student? Is this question understood? Ethical question? So I explained with different dimensions here. So I hope you all captured everything here. Now let's move to question number 7. Try out this question. Read only conflict of interest paragraph and finish it off this 5 marks question. 5 marks question. Okay, I'll give 2 minutes time. Type your answer. Type your answer in the chat box. Then we'll discuss. Do it. That is also comes under ethics. Do it. Question is safeguards. Another verb that we can use is procedures. Okay. So conflict of interest is an ethical threat. It's an ethical threat. It creates an ethical issue. But if you look at International Ethical Standard Board, it said how to manage this conflict of interest. The first thing, if you look at here, both Comet Publishing Company and its rival competitor, Egmont Company, should notify. See, if you are accepting competing clients, the first step is you should notify them. You should notify them. If they are not happy, then you can't do it. So first of all, you should get a consent from both parties. That is the first step that you should do. After that, separate engagement teams to be used. We should apply procedures to prevent access for the documentation of each team. Perform confidentiality agreement should be signed between audit firm and audit team members. Engagement quality control review, we need to perform. Engagement quality control review that we need to perform. Right. Those are the answer for this question. Question number 8. What is the answer? MCQ. What is the answer? Find out the answer. Question number 8. So let's take this question. In line with ACCA Code of Ethics and Conduct, which of the following factors must be considered before internal audit engagement should be accepted? Whether the external audit team have experience to carry out internal audit work. If the assignments will relate to internal controls over financial reporting. Correct. That we have to check. If management will accept the responsibility, yes, management need to accept the responsibility. Answer is B, 2 and 3. Question number 9. ISA 210 agreeing the terms of audit engagement require auditors to agree the terms of an engagement to those charged with governance and formalize these in engagement letter. Question. Identify and explain two factors which would indicate that the engagement letter for an existing audit client should be revised. Find out the answer for this question. Find out the answer for this question. Question number 9. So what are the factors? Simply we discussed when their statutory duties get changed or professional duties get changed, when there is a significant changes in the ownership uh, and additional services provided, if there is any misunderstanding in the existing engagement letter, all these situations, obviously we need to revise engagement letter. We need to revise engagement letter. That is the answer for that question. Question number 10, what is corporate governance? Corporate governance, we all know, the way that entity directed and controlled, that is corporate governance. So corporate governance, we call simply best practice. So when we are complying with corporate governance code, that ensure best practice within the entity. That ensure best practice within the entity. Best practice ensure all stakeholders' interest satisfied. All stakeholders' interest satisfied. Okay. So that leads protect companies from the failures. That leads to protect companies from the failure. That is question number 10 answer. Question number 11. Find out the answer for question number 11. Question number 11. Find out the answer. Student, it's like this. All these questions are only from past papers that I could tell. All these questions are past paper questions. Chapter wise past paper questions. Question number 11. Find out the answer. So which of the following is not a principle of UK corporate governance code? Okay. There should be a rigorous, transparent procedure appointment for the new directors, correct? This comes under effectiveness. The board should have annual general meeting to communicate with investors. The board should have annual meeting. Yes, that is comes under relationship with shareholders. Actually, current corporate governance components and this is old past paper like 2012 or 13. At that time, the corporate governance include the communication to shareholders as well. So actually, this comes under that. The non-executive chairman should decide the remuneration of all directors. That is wrong. Normally, the remuneration committee, 100% non-executive directors, but they decide the remuneration of whom? Executive directors. Non-executive directors' remuneration is fixed. It is decided by the board. Question number 12. Do this question, find out 5 corporate governance weaknesses and the recommendation. Mark this question as important. 5 corporate governance weaknesses and provide a recommendation. Try out this question. Right. You are the audit manager of SN company, have been assigned to the audit of T, the company which is planning to list in stock exchange within 6 months. So if you are planning to get stock listed in the stock exchange, obviously we need to ensure our practices are in line with corporate governance best practice, because one listing requirement is complying with corporate governance. The listing rules of the stock exchange require compliance with corporate governance principles. Directors are unsure whether they are following best practice in relation to this. They have asked audit engagement partner for the view on this matter. This board is comprised 6 executive director and non-executive chairman and 3 other non-executive directors. See here, 6 executive directors, a non-executive chairman, 3 non-executive directors. First problem is board is not balanced. First problem is board is not balanced. Did you identify this? So when we are writing answer for corporate governance weaknesses, students, identify the weakness and explain its impact also. So when board is not balanced, there is a risk. What is the risk? The risk of unfettered power. The risk of unfettered power. Okay. The chairman, therefore, what we should do is, we should recruit more non-executive directors. We should recruit more non-executive directors to balance the board. See here, the chairman and 1 non-executive directors are former executive directors. Okay. The chairman and 1 non-executive directors are former executive directors of T. On reaching retirement age, were asked to take non-executive roles. Now the problem is, as per the corporate governance here, students, the chairman should be an independent non-executive director. Chairman should be a independent non-executive director. But here, chairman is a former executive director. It's a problem. When someone is former executive director, independence is questionable. Independence is questionable. So former executive director is working as a chairman now. He is not independent. But corporate governance said the chairman should be an independent NED. The company has established an audit committee and all NEDs are, including chairman, who chairs the committee. Now the problem is chairman should lead the board. But here chairman is leading the board plus chairman is leading audit committee. Too much of workload that affect what? Efficiency. Okay, so if someone is taking the leadership of the board, someone is taking the leadership of audit committee, all these leadership roles, if someone is taking, means there's a problem. There's a problem with what? Efficiency level. Therefore, better chairman take the leadership of the board, not to take the leadership of audit committee. Right? All 4 members of the audit committee were previously involved sales and production. Sales and production, audit committee, all the members are from sales and production. But corporate governance said 1 member should be financially expert. Minimum 2 members, a small company, Minimum 3 for a big company, but one should be financially expert. One should be financially expert. One should be financially expert. And also here, the audit committee should 100% correct, 100% independent NED. 100% independent NED. That is also a problem here. And next one, all of the directors have been members of the board for last 4 years. That is also a problem because corporate governance said in a regular interval, we should rotate the directors. In a regular interval, we should rotate the directors. Once in every 3 years, or annual re-election is also there. Here 4 years. That is also a problem. As the chairman does not have an executive role, he has sole responsibility liaising with shareholders. No. Chairman's role is not liaising with the shareholders. Chairman's role is what? Ensure board accountability. He is taking the leadership to the board. The company has not established internal audit function. So when internal audit function was not there, it's a corporate governance weaknesses because corporate governance said there should be an internal audit department and internal auditor should report to audit committee. So these are the weaknesses. These are the weaknesses. Is that clear? Is that clear? Is that clear? Corporate governance understood? Right. Balance area we'll discuss in the next year. Okay. Is it useful? So with that point, I'll stop for the day. We'll meet next